In the slick, ultra-modern theatre of Australian retail, where every brand chases the latest trend, the perfect influencer collaboration, and the sleek veneer of Scandinavian minimalism, there is one major player that seems to operate by a completely different rulebook. One retail chain that seems to openly, almost proudly, refuse to die. This is the story of Best and Less, the Aussie budget behemoth that deliberately feels like it's stuck in 2005, and why that calculated refusal to modernize is, paradoxically, its greatest competitive advantage. It's a bizarre and utterly fascinating anomaly in the cutthroat landscape of Australian shopping. Best and Less understands its core audience is purely about utility. They're focused on trust, convenience, and, above all else, a price that won't make them wince. For millions of Aussie families, stepping into a Best and Less store is an instant time machine. It's a trip back to a simpler era of bargain hunting. This conscious decision to lean hard into the nostalgic no-frills identity is critical. It is a sanctuary for the budget-conscious parent, a relationship built on decades of providing exactly what they need, exactly when they need it, at a price point that makes sense. It's the place where the cost savings are palpable and the value is clear. This unwavering commitment to practicality is precisely why, when the rest of the fashion world is chasing fleeting digital trends, Best and Less remains deeply entrenched in the real daily lives of Australian families. The history of Best and Less is rooted in the simple, powerful premise of providing value. Tracing its origins back to 1965, the chain spent decades solidifying its position as a quintessential homegrown Aussie retailer. While many competitors were being sold, rebranded, or collapsing, Best and Less maintained a core identity focused on family basics. Instead of pursuing fleeting fashion trends, they strategically mastered the market for non-negotiable essentials, staking their claim in the highly competitive, yet incredibly stable market for babywear, kids apparel, and, most crucially, school uniforms. This strategic focus is the secret weapon behind their enduring success. Think about the shopping habits of a young family. The vast majority of their clothing budget goes toward items that kids outgrow, wear out, or stain within weeks, like socks, underwear, t-shirts, and most importantly, that mandatory school uniform. The uniform market is a goldmine, a recurring, non-negotiable expense for a massive segment of the population. Best and Less owned a significant portion of it by guaranteeing quality, availability, and, most critically, unbeatable affordability. This specific focus built a deep-seated consumer trust. When a parent needs to buy 3 pairs of shorts, 5 shirts, and a jumper for school with minimum fuss and maximum savings, they go to the store they trust implicitly, and that store has always been Best and Less. Their operational brilliance lies in their simplicity and lack of wasted expense. They keep overhead low, they negotiate hard on massive bulk orders, and they stick rigidly to what they know best. This results in those famously stacked and slightly chaotic stores, which are, in fact, a testament to efficiency. They avoid costly, elaborate store designs and high-concept marketing campaigns, instead channeling every possible saving directly into their core value proposition. This lean retail machine has allowed them to operate successfully in smaller regional areas and local community centers where high-end fashion retailers would fail to survive. The product range itself is a masterstroke of functional strategy. While they offer items for the entire family, the concentration on kids' clothing is disproportionate and highly intentional. Babywear in particular cultivates fierce loyalty. Once a new parent finds a brand that offers soft, durable, and well-priced items for their rapidly growing infant, they stick with it without question. Best and Less captured this market early and maintains it by consistently delivering on their foundational promise. For decades, Best and Less was a private retail success story, a quiet achiever deliberately kept far away from the blinding scrutiny of the Australian Securities Exchange. But in 2021, that changed dramatically. The company, then majority owned by the investment firm Allegro Funds, decided to seek a new valuation by listing on the ASX with an initial public offering. The move was intended to capitalize on the brand's resilience and strong trading performance, particularly the unexpected boost essential retailers had received during the various COVID-era lockdowns. For a moment, It seemed like the market was finally going to reward the brand with a prestigious valuation, elevating it from the simple world of basement bargains to the bright, aggressive lights of financial trading. The initial enthusiasm, however, was quickly decimated by a harsh retail and financial reality. Almost immediately after the listing, the share price began a depressing, steady decline. What looked excellent on the balance sheet for a private company didn't translate into the kind of aggressive, exponential growth story the public market demands. The stock exchange wants innovation, endless expansion, and trend-setting performance. Best in Less, by its very nature, offers stability, reliability, and incremental growth, the complete opposite of a market darling. The subsequent 2 years were a period of intense financial turbulence that systematically hammered the share price and spooked the remaining investors. The company faced a barrage of macroeconomic challenges that were impossible to navigate successfully in a public environment. Global supply chain chaos caused shipping delays and rising costs, coupled with crippling cost of living pressures, meant that even Best & Less's loyal customers were tightening their belts. Profits began to drop, and the retail environment became fiercely competitive as everyone fought for the remaining consumer dollar. The entire precarious situation came to a head in 2023 with the intervention of Brett Blundy. Blundy is a veteran Australian retail czar, a titan in the industry known for founding brands like Sanity, owning significant property assets, and holding substantial stakes in other successful retailers, including the homewares giant Adairs. Blundy, observing the company's share price trading far below what he believed was its intrinsic foundational value, launched a full-scale takeover bid through his investment vehicle, BBRC. He correctly identified that the demand for low-cost, reliable school uniforms and baby basics is non-cyclical and non-negotiable for millions of households. It provides a non-negotiable service, immune to many of the whims that affect fast fashion or technology stocks. Blundy's eventual takeover offer, which quickly went unconditional as shareholders jumped at the chance to sell, signaled the inevitable end of Best & Less's short and turbulent run as a public company. The move successfully brought the company back into private ownership, where it could return to its core focus without the quarterly scrutiny and aggressive growth demands of public shareholders. The chain ultimately refused to die because it fundamentally refused to change its core mission. It intentionally leaned into its commitment to be the most reliable, affordable, and practical place for essentials, prioritizing function and value above all else. The deliberate nostalgia is a robust, time-tested feature. The functional, no-frills environment is a powerful statement that says, we put all the savings into the quality of the product, not the costly ambience. The stock market may have wiped out its initial listing value, but it never managed to wipe out the brand's enduring value in the mind of the Australian parent. Brett Blundy's successful swoop to take the company private was the final, definitive act in this drama, acknowledging that the real, long-term profit lies not in chasing high-flying investors, but in maintaining that deep, enduring connection with the ordinary Aussie family. Best & Less stands today as a tribute to the undeniable power of basics. It's a retail institution built on durable school uniforms, essential baby bodysuits, and simple, honest, non-negotiable value. As long as there's kids who need socks and parents who need to save $1 without compromising on necessity, the Aussie budget chain that refused to die will continue to thrive. It's a powerful, compelling, and necessary reminder that in the confusing mess of modern consumerism, there is still immense foundational power in being simply the best for less. But what do you think? Is embracing a no-frills, anti-modern identity a truly sustainable strategy against giants like Kmart and Amazon, or will they eventually be forced to modernize their look? Have you personally found yourself drawn more to stores that remind you of your childhood, prioritizing reliability over the latest trends? Let us know your thoughts in the comments section below. Thank you guys so much for watching, and as always, stay curious.